Hello, Rudy Campos with eXp Realty, and today we're going to be discussing loans and information that will be very valuable to the public. So we're here with Chris with Smart Home Mortgage, Chris Clark. We've been working with Chris for the past few years. Chris is a great loan officer, excellent service, and I would recommend you call him if you have any questions regarding real estate loans or mortgages. So Chris, today we want to talk about a little bit about what people can find out about getting a government loan, FHA, VA loans, and why there's benefits to those loans versus maybe other types of financing.
Absolutely, yeah. So if we're talking about government loans, one of the great things that they offer is credit flexibility, meaning you can get a great rate on that loan, you still come in with a low down payment, and you can have less than perfect credit. What that means is, anybody down to about a 580 FICO score can get an FHA loan. USDA usually is approved around like 620 to 640. So you can have 3.5% down or 0% down, or in those USDA areas you can get approved for 100% financing as well. So one of the key factors of these programs is that you have an ability to streamline the refinance process. So what that means is that you can have limited documentation, income documentation is usually not required, and no appraisal is usually needed. So you're saving money on cost and fees, you're lowering your rate. It's designed specifically to take advantage of lower interest rate environments, which we expect to see hopefully in the next 6 months to a year, but we can't always read the economy 100%. It's a little bit up and down. We try to predict all we can. So if anybody who's currently in the last few months or the last year gotten a government loan, it's definitely a great time to look to the near future and take advantage of that streamlined refinance.
So what's the difference, Chris, between an FHA loan versus a VA loan and versus a streamlined refinance?
Sure. So the main difference between FHA and VA is who is eligible for them. So when we look at an FHA loan, anybody is eligible from DACA, people who are in the process of getting their citizenship. If you have a permanent residence card or even a working visa, then anybody from that up to a U.S. citizen can take advantage of FHA financing. When we look at VA financing, it's specifically for military and veterans and their families. So that could be a surviving spouse of somebody who is in the armed forces who maybe passed away. Those benefits do apply to them as well.
That's great to know. I didn't know that. And as far as the streamlined refinance, what does that entail and how is that different from the other two?
Right. Yeah, so the streamlined refinance is specifically for people who have already been vetted through the government loan process. So they take that first loan that they originated and they say, okay, we've already done the due diligence to see that you can qualify. Let's simplify the process and simplify the cost here. And it's available to anybody who already has those government loans. And a lot of times you have to lower your interest rate by at least 0.5%, so 0.5%. And as long as it makes sense on paper as to why you're refinancing, then you're approved. You usually have to wait also about 6 months or 180 days from the day that your first mortgage closed before you can take advantage of that streamlined refinance.
Great. If somebody has, let's say, a situation where they're having a difficulty making their payments, what would be the benefit of having an FHA loan or VA loan?
Yeah, so a VA loan is definitely, there's special counseling that's available to people who are maybe going through a financial hardship. The VA in particular is very, very flexible with working with veterans to help them in case there's any type of hardship that they come across. So there's definitely help out there. And if you're struggling to make your payments, the best thing you can do is be communicative with your bank and speak with your bank and see what your options are, and don't try to avoid talking to them, because when you don't answer the phone or you don't pick up or talk to them and let them know what's going on, then they start to panic and they are more likely to proceed with foreclosure options, when that could be 100% avoidable.
Okay. And are FHA loans also in the same situation?
There's special HUD counselors that you can go to. They are, really any program that you're in, whether it be conventional, FHA, VA is definitely going to be a little bit more flexible, but FHA and conventional, the same rules would apply. You can speak to HUD counselors, and a lot of times either enter into forbearance or put your payments on pause for a temporary period of time, or look at if a loan modification is needed. You can always do a loan modification to ramp up your payments to a little bit more affordable while you go through that hardship.
Great. Are both of those loans, FHA and VA, are they assumable by somebody else in case somebody needs to, let's say, sell their property and let someone assume it or take over their loan? Is that
Yes.
possible?
So FHA is the only one where it's under certain conditions. They look at whether somebody already has an FHA loan, and they evaluate certain other things, if they're a family member or not. A few different things go into factor with the FHA. VA does allow assumability, and USDA also will allow assumability. So any properties that are located, particularly in Ventura County, your USDA approved areas are going to be Fillmore and certain patches of Ojai as well. All of those loans that are USDA in those areas can technically be assumed, and that interest rate could pass on to the next buyer.
Okay. And so as far as being able to assume a loan for VA, can anybody assume the loan, a VA loan, or does it have to be a veteran?
I've been told that anybody can assume it. So I would assume that it is available, but the hard part about that is getting the seller to allow you, because a lot of times veterans are trying to free up their VA eligibility, and so when they allow somebody to assume that loan for them, it's kind of preventing them from doing what they're trying to do. So it is possible. It could be a little bit more difficult to find that situation.
So maybe only in the case where somebody is financially not able to continue making the payments, they want to allow somebody else to take over their loan.
Sure.
What would be the benefit of doing that?
Yeah, that would allow them to, pass that loan on to somebody else and get out from underneath that payment if they're struggling with it. The buyer would still need to come in with some difference if the person is trying to basically sell their house but not sell it technically and allow them to assume it. The buyer would still need to come in with some funds.
Okay. What does the term subject to mean when somebody wants to take over a loan that may not be assumable? Are you familiar with that term, subject to?
Subject to might be like under certain conditions.
Okay.
So usually if they're looking at whether or not the loan is assumable, or if the person qualifies to assume the loan, that would probably be a time where they would say subject to.
Okay.
Subject to approval.
Right. And the reason I asked that question is because I bought a property, an apartment building, where basically the seller had a loan in place already. He allowed me to take over his mortgage and the payment. And within a year, after doing some improvements to the property, I was able to refinance the property and also be able to, get back all the money that I had put into it for purchasing the property, as well as the money that I spent repairing it. So that's the situation where I was able to do that. What I've heard is that the concern is that the bank could actually call the loan due if somebody else takes over a loan without permission or without qualifying. That's why I was asking if you're familiar with that.
Yeah, but again, they'll still vet somebody, you still have to qualify, so that it seems like we're on the right track there.
Okay. And the reason I bring these topics to the public and to anybody else listening is that a lot of people don't know why should they go with a VA loan or FHA loan or conventional loan. And the other question is, a lot of people think that they have to have 20% down payment in order to be able to get a loan. Is that correct?
Yeah, a lot of people do think that. You know, the most common, I believe for 2021, the average of first-time home buyers came in with about 7%. And that I even find to be a little bit on the higher side because there are so many low down payment options and even, you know, down payment assistance programs out now. So yeah, you definitely don't need 20%. You can get in the door with 3.5 FHA. You don't need any down payment for VA or USDA. So there's definitely some great options out there now.
Okay, great. Now talk about the USDA program. What is that exactly? USDA.
Yeah, USDA is the loan that is backed by the U.S. Department of Agriculture. So what USDA has done is make 100% financing available for rural areas. So that would be places, again, a little bit outside of the, you know, city or metropolitan areas. Areas in Ventura County that are USDA approved is definitely Fillmore, the entire area of Fillmore, and then certain parts of Ohio as well are considered USDA.
Any areas in the city of Oxnard, Fort Hueneme?
There's none in the city of Oxnard or Port Hueneme unless they were already agriculture zones. There's usually not single-family homes, like any tracts that are out there most that I've seen.
I was thinking of the area like El Rio, which is somewhat in the outskirts of the city of Oxnard.
Right, right.
Some areas were rural.
Yeah,
but
surprisingly enough, though, it's not on the map for USDA.
Okay.
Which you'd think it would be, but I guess Oxnard has just grown a lot, and they've updated that.
Okay.
But you could still do, you know, 3% down.
Right.
Into those properties. So.
And Chris, what would be the benefits of working with a mortgage lender versus a bank?
Yeah, I'd say that the biggest advantage and the biggest difference maker here is think of a mortgage broker as like a Swiss Army knife, right? We have a lot of different products and a lot of different banks that we work with to help service a wide variety of clientele. So if you go to your bank, you know, they can offer you very competitive pricing, but they usually have one or maybe two things that they try to specialize in. And if somebody is not necessarily in that box or doesn't fit those guidelines or, you know, criteria, then, you know, unfortunately you get turned away or told that you can't do it. And it could have been a very closable loan for somebody else in another situation.
Yeah, and the reason I bring that up is because I've had clients who went to a bank, they were not approved,
right,
or they didn't have the program that would fit their criteria, and then they went to a mortgage broker and got qualified and purchased a home.
Yeah, and it's just that easy, you know, for us. It's just having the options available and knowing which lenders that we're partnered with that will specialize in to help that client.
Right. So again, if you have any questions regarding loans, mortgages, FHA, VA, and Cal FHA, those are also other programs as well as the USDA, then please call Chris Clark. And what's your number, the best number to reach you?
Yeah, my direct line is going to be 805-826-3283, and that's my cell number, so you can call, text, anything usually works until about 8 p.m.
Okay, so he works all day long.
Yeah.
If you want to find out about buying a home and also listing a property, selling your home for the most amount of money, please call me directly also at 805-479-2992. If you're also interested in considering a change of your brokerage, call me and I can give you more information about what is the best about eXp Realty. Again, my number is 805-479-2992. Chris, thank you again for your time.
Thank you.
And your expertise.
I appreciate it, dude. Thank you.
Thank you. Have a great day.